What's up, crypto crew, and welcome back to Bitcoin Bulletin. The market is absolutely exploding, and if you're not plugged in, you're missing out on the biggest moves of the year. We've got a packed show today with updates that could redefine your portfolio. From established giants making massive plays to the cutting edge of decentralized finance, the pace is relentless, and we're here to break it all down for you. Get ready, because you're about to hear the news you need to know to stay ahead of the curve. First up, we're diving deep into the altcoin arena where analysts are pointing to some serious opportunities. We'll reveal the top 5 altcoins that could be your next big win, featuring titans like Bitcoin and Solana, plus a brand new presale that's generating serious buzz. This isn't just a quick glance. We're talking about the strategic moves that could set you up for massive gains. Stick around, you won't want to miss this. Then, we pivot to a fascinating look at how major corporations are viewing Bitcoin for their own financial strategies in the coming year. Is the digital gold rush extending to the boardroom? We'll explore the serious financial case being built for Bitcoin as a core treasury asset for major companies. You'll want to hear this. After that, we tackle a critical issue facing the network, the ongoing fee crisis. But it's not all doom and gloom. We're also exploring the innovative solutions emerging from the world of BTCfi that could fundamentally change how miners and investors interact with the network, potentially securing its future and unlocking new investment avenues. You'll want to hear this. Finally, we're looking at the very real challenges of Bitcoin's network security and transaction fees, and how the burgeoning BTCfi ecosystem is stepping up with scalable solutions. It's a deep dive into what keeps the network humming and how new financial instruments are being built directly on the Bitcoin blockchain. Don't go anywhere. Make sure you hit that like button, subscribe for more, and ring that notification bell so you never miss an update. Let's get into it. The altcoin advantage, unlocking 2025's top picks. The cryptocurrency market is buzzing with anticipation as investors eye the next major upswing, and the quest for the best altcoins to buy right now is at its peak. While established players like Bitcoin and Solana continue to command significant attention and anchor portfolios, the landscape is rich with emerging opportunities. Analysts are particularly highlighting a new presale project, MAGACOIN Finance, as a potential standout for 2025, with projections suggesting substantial upside. Alongside these, XRP and Hyperliquid's Hype token are drawing considerable interest, rounding out a compelling list of 5 altcoins poised for significant growth. Bitcoin, the undisputed king of the crypto world, continues to demonstrate remarkable resilience and adoption. On-chain data reveals an impressive statistic. 92% of Bitcoin holdings are currently in profit, underscoring its robust performance. Furthermore, institutional interest is on a clear upward trajectory, with investment funds and corporate treasuries acquiring over 126,000 BTC in the third quarter alone. The expansion of U.S. spot Bitcoin ETFs and new international listings, such as Kazakhstan's Font ETF, are further broadening its global reach and accessibility. Analysts are forecasting a significant price appreciation for Bitcoin in 2025, with predictions ranging from $150,000 to $160,000, solidifying its position as a foundational asset in any investment strategy. Solana has successfully established a strong support base, trading consistently between $160 and $170, with over 41 million SOL currently held within this range. The network's fundamentals are being reinforced by significant on-chain activity, including a notable whale staking 1.5 million SOL in a single week, signaling strong conviction in Solana's long-term prospects. The potential approval of Solana ETFs by major players like Van Eck and Bitwise, coupled with increasing activity in CME Bitcoin futures, could inject substantial liquidity into the market. Analysts are optimistic about Solana's future, with price predictions for 2025 reaching between $300 and $500, positioning SOL as a key altcoin to watch for the next bull run. XRP has recently secured a significant legal victory, with a $125 million settlement with the SEC affirming that XRP is not to be classified as a security in public trading. This crucial clarification has paved the way for renewed institutional interest, with large holders, or whales, acquiring approximately 440 million XRP during recent price dips. The growth in open interest for XRP on CME futures has also been record-breaking, surpassing $1 billion in rapid succession. Analysts are projecting favorable trading conditions for XRP, with expectations of it trading between $4 and $5.50 in optimistic scenarios, marking it as a top contender among the best altcoins to invest in. Hyperliquid's HYPE token has captured market attention through its aggressive token buyback initiatives. The project has repurchased over 8.7% of its circulating supply, with recent token burns effectively reducing the available float and potentially increasing scarcity. This deflationary mechanism, combined with substantial whale acquisitions exceeding $35 million, has fueled significant price rallies, with HYPE recently reaching a new all-time high above $50. Traders are increasingly viewing HYPE as a prime candidate for long-term growth within the current DeFi-centric market cycle, identifying it as one of the 5 best altcoins to consider. While these established cryptocurrencies are making waves, analysts emphasize that the most significant opportunities for asymmetric returns often lie within emerging presale projects. MAGACOIN Finance has rapidly emerged as a frontrunner in this space, being touted as the premier presale cryptocurrency to invest in for 2025. Projections suggest a potential 900% return by the next market cycle, driven by a narrative that resonates with investors shifting capital from larger-cap assets to undervalued opportunities. For those seeking to understand why Bitcoin, Solana, and presales like MAGACOIN Finance are being recommended, this project offers a compelling narrative. The overall market outlook for altcoins heading into 2025 remains exceptionally strong. Bitcoin is poised for record highs, Solana is expected to break out, XRP has re-established institutional confidence, and HYPE's deflationary model introduces dynamic new market forces. However, MAGACOIN Finance presents a unique proposition, standing out as one of the best altcoins to acquire now for investors targeting higher potential upside. A balanced strategy, incorporating both established majors and promising emerging tokens, could prove to be the most effective approach for navigating the upcoming market cycle. But what does this mean for the future of corporate finance? Next, we explore the strategic case for Bitcoin as a treasury asset in 2025. Bitcoin's boardroom appeal, the strategic case for corporate treasury assets in 2025. In an evolving financial landscape, the strategic integration of digital assets into corporate treasury management is no longer a fringe concept, but a growing consideration for forward-thinking companies. As businesses increasingly look for ways to hedge against inflation, diversify their holdings, and tap into new avenues for growth, Bitcoin is emerging as a compelling candidate for a corporate treasury asset in 2025. This shift reflects a broader acceptance of cryptocurrencies as legitimate financial instruments, moving beyond speculative trading to strategic, long-term value preservation and potential appreciation. The increasing institutional adoption, coupled with regulatory clarity in certain jurisdictions, is laying the groundwork for a significant influx of corporate capital into the digital asset space. The fundamental appeal of Bitcoin as a treasury asset lies in its unique characteristics. Decentralization, a fixed supply capped at 21 million coins, and its proven track record as a store of value, often referred to as digital gold. Unlike traditional fiat currencies, which are susceptible to inflationary pressures and devaluations through monetary policy, Bitcoin's scarcity model offers a hedge against such risks. Companies are recognizing that holding a portion of their treasury in Bitcoin can act as a buffer against currency debasement and provide a hedge against systemic financial risks. Furthermore, the increasing liquidity and maturity of the Bitcoin market, supported by the development of regulated financial products like ETFs and futures, makes it more accessible and manageable for corporate treasurers. The institutional adoption trend is a critical indicator of Bitcoin's growing legitimacy. Major corporations that have already added Bitcoin to their balance sheets, such as MicroStrategy, have demonstrated a strategy of leveraging the asset for capital appreciation and as a hedge against economic uncertainty. Their experiences are closely watched and often inspire other companies to explore similar allocations. The narrative is shifting from Bitcoin as a speculative bet to Bitcoin as a strategic reserve asset, akin to how companies historically allocated portions of their reserves to gold or other precious metals. The infrastructure supporting this adoption continues to develop, with more custodians offering secure, insured storage solutions for institutional-grade digital assets. Moreover, the potential for Bitcoin to offer attractive returns in a low-yield environment is a significant draw. While traditional treasury assets may yield modest returns, Bitcoin has historically demonstrated periods of significant price appreciation, offering the potential for capital growth. This is particularly relevant in the current economic climate, where inflation remains a concern and interest rates, while rising, may not fully compensate for the erosion of purchasing power. Companies are weighing the risk-reward profile of Bitcoin against other traditional treasury management options, and for many, the potential upside justifies a measured allocation. The regulatory landscape, while still developing, is becoming more defined. The approval of spot Bitcoin ETFs in the United States, for instance, provides a regulated and accessible on-ramp for institutional investors, including corporations. This regulatory clarity reduces perceived risks and makes it easier for companies to navigate compliance requirements. As more jurisdictions provide clear regulatory frameworks for digital assets, the confidence for corporate treasurers to allocate capital will undoubtedly increase. Audience impact. This strategic pivot by corporations is generating widespread discussion among financial analysts and investors, with many seeing it as a validation of Bitcoin's role in the future of finance. The potential for significant capital inflows from corporate treasuries could be a major catalyst for price appreciation and market stability. But as more entities look to integrate Bitcoin, what challenges arise within the network itself? Next, we delve into Bitcoin's fee crisis and the rise of BTCfi as a solution for miners and investors. Navigating the Bitcoin fee maze, the rise of BTCfi for miners and investors. The Bitcoin network, while a revolutionary technology, is currently grappling with a significant challenge: escalating transaction fees. As network activity increases, the competition for block space intensifies, driving up the cost of sending Bitcoin transactions. This phenomenon, often referred to as Bitcoin's fee crisis, poses a considerable hurdle for everyday users and small-scale transactions, potentially impacting Bitcoin's utility as a medium of exchange. However, this challenge is also spurring innovation, leading to the emergence of new solutions and ecosystems, most notably the burgeoning field of BTCfi, Bitcoin Decentralized Finance. BTCfi represents a new frontier for Bitcoin, aiming to unlock the vast potential of its blockchain by enabling the creation of decentralized financial applications and services directly on the Bitcoin network. Traditionally, smart contract functionalities, a cornerstone of DeFi, have been more readily available on platforms like Ethereum. BTCfi seeks to bridge this gap, leveraging various technological advancements and Layer 2 solutions to bring similar capabilities to Bitcoin. This includes the development of protocols for lending, borrowing, decentralized exchanges, and yield generation, all built upon the secure and robust foundation of the Bitcoin blockchain. The implications of BTCfi for miners are particularly profound. As transaction fees become a more substantial portion of miner revenue, especially during periods of lower block subsidies, the efficiency and value of these fees are paramount. BTCfi applications, by increasing the demand for block space and potentially creating new types of on-chain transactions, could significantly boost miner revenue. Furthermore, the development of more sophisticated financial instruments on Bitcoin could lead to more predictable and sustainable fee structures. Miners who can support or integrate with these new BTCfi protocols may find themselves in a more advantageous position, benefiting from increased network activity and a more diverse revenue stream. For investors, BTCfi opens up a world of new possibilities for interacting with their Bitcoin holdings. Instead of simply holding Bitcoin on a ledger, investors can now potentially earn yield on their assets, participate in decentralized lending protocols, or gain exposure to synthetic assets without needing to convert their Bitcoin to other cryptocurrencies. This allows for greater capital efficiency and the ability to leverage Bitcoin's inherent security and decentralization for a wider range of financial activities. The growth of BTCfi could also lead to increased demand for Bitcoin itself, as more use cases emerge that require holding BTC on the Bitcoin network. Several technological advancements are enabling the rise of BTCfi. Layer 2 solutions like the Lightning Network are facilitating faster and cheaper transactions, which are crucial for many DeFi applications. Protocols that enable smart contract-like functionalities on Bitcoin, often through discrete log contracts or other innovative methods, are also paving the way for more complex financial operations. The Ordinals protocol, which allows for the inscription of data onto Satoshis, has also introduced new forms of digital assets and collectibles on Bitcoin, further expanding the ecosystem's potential. Audience impact. The emergence of BTCfi is being closely watched by both the crypto community and traditional finance observers. Many see it as the next major evolution for the Bitcoin network, potentially rivaling the success of Ethereum's DeFi ecosystem. Discussions are rife about the technical challenges, regulatory hurdles, and the potential for massive growth. While BTCfi offers exciting new avenues, the core network faces ongoing security and scalability questions. Next, we examine how BTCfi provides scalable solutions for network security and investment. Fortifying Bitcoin, BTCfi's scalable solutions for network security and investment. The Bitcoin network, the bedrock of the cryptocurrency revolution, is continuously evolving to meet the demands of a rapidly expanding global user base. While its security and decentralized nature are unparalleled, the network faces inherent challenges, particularly concerning transaction throughput and the resulting fee market. The current fee structure, while serving as a crucial economic incentive for miners to validate transactions and secure the network, can become a barrier to entry for smaller transactions, leading to what's often termed Bitcoin's fee crisis. This situation necessitates innovative solutions that can enhance scalability and maintain network security without compromising its core principles. Enter BTCfi, the burgeoning decentralized finance ecosystem built directly on Bitcoin, which is emerging as a powerful set of tools to address these very issues. BTCfi aims to leverage Bitcoin's robust infrastructure by introducing financial functionalities traditionally found on other blockchains, such as Ethereum. This includes enabling protocols for lending, borrowing, derivatives, and other complex financial instruments that can operate securely on the Bitcoin mainchain or through Layer 2 scaling solutions. The development of these applications is not merely about creating new financial products. It's about fundamentally enhancing the utility and economic viability of the Bitcoin network for all participants, including miners and investors. For miners, the implications of a thriving BTCfi ecosystem are significant. As the block subsidy, the fixed reward miners receive for adding new blocks, gradually halves over time, transaction fees will become an increasingly critical component of their revenue. BTCfi applications, by driving greater on-chain activity and creating demand for block space through novel financial transactions, can lead to a more substantial and sustainable fee market. For instance, complex smart contracts or DeFi interactions might generate higher value transactions or a greater volume of smaller, fee-paying transactions that collectively boost miner income. This increased revenue stream is vital for maintaining the security and decentralization of the network, as it incentivizes more miners to participate and secure the blockchain. From an investment perspective, BTCfi democratizes access to sophisticated financial strategies that were previously difficult or impossible to execute on Bitcoin. Investors can now potentially earn yield on their Bitcoin holdings through lending protocols, participate in decentralized exchanges to trade assets without intermediaries, or access synthetic assets that track the price of other commodities or currencies. This not only provides new avenues for capital appreciation, but also enhances the utility of Bitcoin as a financial asset. By enabling these diverse use cases, BTCfi can attract more capital into the Bitcoin ecosystem, further strengthening its network effects and economic security. The scalability of the Bitcoin network is being addressed through a multi-pronged approach within the BTCfi space. Layer 2 solutions, such as the Lightning Network, are crucial for handling a high volume of small transactions efficiently, effectively offloading much of the network's base layer burden. Simultaneously, advancements in Bitcoin scripting capabilities and the development of protocols that enable more complex computations on-chain are expanding the network's potential without requiring fundamental changes to its core consensus mechanism. These innovations work in tandem to increase Bitcoin's transaction capacity and reduce the pressure on base layer fees, thereby mitigating the fee crisis. Audience impact. The innovation within BTCfi is generating significant excitement, with many believing it could unlock Bitcoin's full potential as a global financial settlement layer and a platform for decentralized finance. Discussions are ongoing about the best methods to integrate these new functionalities while preserving Bitcoin's core properties of security and immutability. These developments paint a picture of a dynamic and evolving crypto landscape. Let's quickly recap the biggest stories of the day before you go. And that's a wrap for today's explosive crypto news. We covered the top 5 altcoins analysts are bullish on, including Bitcoin, Solana, and a hot new presale. We also explored the strategic reasons why major corporations are eyeing Bitcoin as a treasury asset for 2025. Plus, we dove into Bitcoin's fee challenges and how BTCfi is paving the way with scalable solutions for miners and investors. Don't miss out on any of these critical updates. Make sure you're subscribed, hit that notification bell, smash that like button, and follow us on all our social platforms for more real-time insights. We'll see you in the next one.